Hey everyone, it's Wednesday morning, January 28th, and welcome back to Capital Markets Quickie. I'm your host, Endrit Sella, here to break down yesterday's market action in just 2 minutes. Quick note before we dive in. Today's episode is brought to you by AMF Capital, Asset Management Frankfurt. Learn more about our funds and strategies at amf-capital.de. Alright, let's get started. So, yesterday, Wall Street mostly finished higher, and once again, tech was doing the heavy lifting. The Standard & Poor's 500 climbed about 0.4% and hit another all-time high, while the Nasdaq jumped nearly 1%. Investors were clearly feeling optimistic ahead of big earnings reports from companies like Meta, Microsoft, Tesla, and Apple. Now, this optimism was fueled by strong news from memory chip makers, which gave the whole tech sector a nice boost. Experts say traders are still betting that artificial intelligence and cloud spending will stay strong this year. But, well, it wasn't green across the board. The Dow Jones dropped roughly 0.8%, and the big reason was United Health. Its shares plunged around 20%, even though the company actually beat profit expectations. The sell-off came after new Medicare payment proposals disappointed investors, sending healthcare stocks lower across the board. At the same time, trade tensions were back in focus. After years of negotiations, the European Union announced a major trade deal with India, which markets see as a pushback against President Trump's aggressive tariff policy. So, once again, global trade politics are playing a role in investor sentiment. On the economic side, we got some worrying news. Consumer confidence fell to its lowest levels since 2014, even below pandemic-era levels. Americans are feeling the pressure from higher prices, tariff uncertainty, and an unclear outlook for trade policy. Meanwhile, the Federal Reserve kicked off its first policy meeting of the year yesterday. Markets expect interest rates to stay unchanged today, but everyone is listening closely for hints about when rate cuts could start. And finally, Washington drama is heating up again. A possible government shutdown is looming, as Senate Democrats try to block funding for the Department of Homeland Security following political backlash over a recent fatal shooting in Minneapolis. So, to sum it all up, tech pushed markets to new highs, healthcare stocks dragged the Dow lower, consumer confidence is weakening, and both trade and politics remain big wildcards. Alright, that wraps up today's Capital Markets Quickie. Join me again tomorrow morning for more market updates. See you then.